Morning, guys. Yeah, look, it's Chairman Mo again. This is supposed to be like a blitz video. Obviously, knowing myself, it probably will go a bit as long or longer than some of the other videos that I have recorded, but it's worth a try nonetheless. I think something just came to mind, and I thought, yo, if only I could share this or could have added this to the sitting on cash video. But obviously, that opportunity doesn't always present itself. And hopefully, I can open one of the portfolios. This is actually my longest going portfolio. And then just show you guys the percent return. I'll show you the amounts. Don't focus so much on the amounts because I think mid this year, I actually liquidated the whole portfolio. It belonged to a company of mine, thousands. And the reason I liquidated the portfolio was so that I could focus, as I've said, on my qualifications, on building parts of the business, that sort of a thing. So I think it would have been unfair at that point in time to have split focus when it comes to shareholder funds and that sort of a thing. But I think I saw a status this morning from a friend of mine who recently started investing and the returns that they have. And I was sitting there thinking, yo, one of them, I think it's a share I recommended. The other one is a share that he had recommended, but when it was down, I advised buy more, which he didn't, which was fine. But then he learned the lesson that, oh, snap, oh, so this is what happens when a company I believe in goes down and then comes back up again. And I'm looking at the returns, and I jokingly responded, hey, Dot, are you trading? Are you into Forex? That sort of a thing. And he laughed and politely said, no, whatever. Obviously, part of the joke being, hey, Dot, this is what you put me on. Um, but I think I looked at that and I thought, why is it that I'm not allowed to tell you guys that you can make this much money in investing? Why is it that I automatically said, Endot, are you in trading? You know, why is that not returns that I've seen in investing, but I can't say them? I'll give you an example of my Meta trade. Meta, you guys will famously know, or I've spoken about it on various platforms. I started buying Meta at 150 last year and it dropped all the way to 82. And around that time at 82, 85, I was my most bullish. I bought even more Meta shares. I think I doubled my shareholding at that point in time. And that was around the same day or a day or two later after Zuckerberg had fired 13,000 staff members, so 10% of his workforce. And I remember having being on a phone call for an hour or so with a friend of mine who asked me, where do you get the conviction from? Why do you believe in this company so much? And I went through the numbers with him. The free cash flow, I think Meta generates like $25 billion in free cash flow a year. And that's just on their Facebook business. So there's Facebook and Instagram standstill business. And what had brought them to 82 or $85, as far as the market was saying, was the launch into Meta and the 10 billion that they invested, and that was a loss, and you name it, all of that, it's not working out, whatever. And I was like, listen, with 1 year's cash flow, Facebook can afford to invest in 2.5 Metas, especially because there's no, what do you call this? There's no debt on their books or subsequent a lot of debt. I think they've got something like 7 to 10 billion in debt, and it's something that they can very quickly get rid of. So for me, it felt as if this is something that we can very quickly jump into because it's a no-brainer. These guys are not losing money; they're losing money on a division, which is what you give CEO the right to make decisions on. You know, Facebook became Facebook because of Mark Zuckerberg's brilliance. So I wouldn't imagine as an investor, I would want him to stop being brilliant, stop taking those risks that make me money within a vehicle that is debt free and continues to generate to the tune of $25 billion in revenue. And so I decided that, hey, you know what? Let me actually go through where this conviction comes from. Because when it's happening, trust me, it's not conviction at all, right? This account used to have about 50,000 rands. You'll just pardon me. I'm sharing it for illustrative purposes. I'm not sharing it for whatever, all these funny purposes, you name it, right? The important thing that I want you to look at is that 41% profit or loss return. And for those of you that are not aware, right, in South Africa, and you'll see our own South African shares, we currently are going through a very, very tough market, whatever, downturn or whatever, where essentially a lot of the shares that I like are down, but the portfolio is still 41% up. And the reason that is, a huge part of it has to do with when I bought the companies that I bought. And that is why I speak about the opportunity cost of holding cash. Why? It's all good and well to be invested and diversified and what have you, but if you are not willing to be patient, or if you're not able to be patient enough to wait for the opportunities that come your way, you're going to miss out on these sort of returns. Because I can tell you now that this was 3 years ago. So when COVID struck, it wasn't luck, because I've been investing for well over 10 years and I always knew that a market correction is around the corner. So I always kept cash on hand for when that market correction comes, I can jump on it, right? But I see more and more with portfolios that it's difficult to do that during good times, because sometimes you go 4 or 5 years without the market correction ever coming. I'm looking at some of the shares that I recommend. Sibanye has been a fan favorite of mine for the past 3 years, meaning that for 3 years in a row, all I would have asked you to do is buy Sibanye. Now, you would have bought it as high as 73 Rand, you would have bought it as middle as 50, 45 Rand. And as is happening to some of my shareholders, they're now 50 to 60% down. And now we're buying Sibanye at essentially at about 22 Rand. And now that's when we don't want it the most, at 22 Rand. And that's why I'm saying to you that that's where it becomes tricky for you guys, where I basically then request that you sit on cash. Yeah, so that ends up then bringing me to a situation where I say, some of the conventional advices that we can't get to if you're not in the habit of putting money aside, nah, is that we can't then show you the opportunities that come when you've got 50,000 Rand lying around for an opportunity, because then you can start getting phenomenal percentage returns on one-off events. And over the long term, again, as I say, dollar cost averaging, all of those are still advisable and all of them are still there. But I wanted to show you guys what a perfect portfolio in inverted commas can look like. And mind you, there were times when I was very down on this portfolio, minus 23%, minus 30%. But what I was comfortable with was that in this particular portfolio, I'm the only one that looks at it. I'm the only one that's accountable to it. So I can comfortably relax and wait for that big opportunity while I continue putting away my whatever, 100 Rand, 200 Rand, 1,000 Rand a month to invest. And I think that's the important thing that I need you to take away, that for me, every time the 200 Rand or 1,000 Rand debit order was going through, I was investing and I was counting that as I'm investing. I wasn't counting the fact that um, I'm waiting to make a big purchase as the investment date itself. That's why I said in the previous recording that we need to get comfortable where cash is also an investment opportunity or an investment, because it gives you optionality. It gives you the ability that when huge opportunities show up in the market, you can take advantage of them. So I just want to show you something in this portfolio. As I say, the percentage is what matters. The fees will essentially show you how much money was in the 229. So you know that there was a lot of trading in and out that went in there. I just want to calculate roughly how much that was in fees. I know they take 0.064 as a thing. Um, as their fee. So I just want to see if I've got the fee of almost 230, and then I work it backwards to say what was the portfolio value if the fee that they charge is 0.064%. Yeah. So I'd invested about 35,000 and I'd withdrawn about 55,000 in this portfolio. But here's where I want to show you what I mean when I say to wait. So what you'll immediately notice is that almost all the shares are green, right? And it's high green percentages. So you can see, for example, um, AIM, African Media Entertainment, I had bought at 20 Rand per share. It's currently at 36 Rand per share or 35 Rand per share. And that's a 74% increase or 74% upwards. Caxton, I had bought, no, not at 6 Rand. Let me just open that. That will show you. So I bought when the share price was still 5 Rand 15. And if I can show you, that wasn't even a year ago. That was over here. So you can see around that area. That is where I had bought Caxton. And you can imagine I had held Caxton all the way from 2014 in my other portfolios. It went as high as 22 Rand, 20 Rand. It settled around the 12 Rand area. That's where I was comfortable with it most of the time. Then around the 10 Rand area. And then it basically gradually just went down. But basically around the COVID times, that's where I decided that no, 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 no. This company is too cheap for how I know it to be, and I bought the shares. But I wasn't looking at a graph, by the way. I was looking at the fundamentals. So I was looking at the debt, I was looking at the earnings, and I was looking at the dividends. And I just said to myself, at this rate, at 5 Rand 15, that is insane level of cheap. And then I was able to buy based on that, not based on a graph. I repeat, I was not buying based on graphs and that sort of a thing. I don't know how to interpret graphs. Then you look at things like cognition, similar to cognition. I bought at 68 cents a share. If I can show you when it last touched 68 cents, not even there, let's go max. Essentially, for the better part of 2019 or so, it was in that almost 60 cents, 50 cents area, you know? That's where I was able to take to get it. Then Grindrod was essentially a spin-off. I'm a shareholder in Rembrandt. So then when they spun off, I basically was able to get shares in Grindrod, so I didn't buy it. Home Choice Limited, you'll see I bought it at 26. It's in the red, close to 30% down, which I'm comfortable with. ISA Holdings is another one, or ISA Holdings, if I can show you when last they were 80 cents, not in the last year, max, let's go. They touched 80 cents basically around the 2014 area. And then essentially this period, COVID plus some change, they've been up around 81 cents. Louis, my ultimate favorite. Louis, I'm not even gonna go through because I bought in and out throughout its life cycle. But I just want to show you the max. The max was again this COVID area where they were 13 Rand. I know someday they got to 8 Rand. That's not where I got my maximum allocation. Most of it was acquired around that 30 Rand in between that gap. So you can see that whenever Louis has dropped below 30 Rand, I've always been a very keen buyer. But again, it's always based on fundamentals. It's based on the fact that you're getting a dividend that is out of this world at that value. I think Louis pays annually a dividend of 4 Rand. So you can imagine at 20 Rand a share, every time they pay a 4 Rand dividend, I'm basically getting, 25% of my money back. And if you ask me how I do that, it's not necessarily by buying Louis at 40 Rand, which is still very cheap, by the way, because that still gives you a 10% dividend. It's buying, yes, an allocation at 40 Rand, but a huge amount of the money waiting for that market panic. And sometimes the market doesn't panic on the shares that you're waiting for. Um, ISA was a favorite, I mean, Novus was a favorite shareholding of mine. As you can see, I bought it at 120. Last time it was 120. Again, COVID around that area. And ever since then, it's never dropped below 1 rand. Interest sake for like 3 or 4 years in a row, they were paying a 50-cent dividend. So literally within 3 years, I had received all of my money back. And today at 261%, I basically am just collecting dividends that are above my share price. Then there's a New World. New World, I bought at 25.98. Um, Interesting company. Remgro, as I spoke about. Sibanye is the one that I was telling you about, where I say I essentially bought very high. So I bought it around 47 Rand 70, which I still think is very cheap at that point. So today at 22 Rand something, you can imagine I've said more than enough when it comes to Sibanye in terms of ability to buy it. Transpaco, most of you would probably not even know it. The last time it was 14 Rand was essentially, again, that COVID period, and then a little bit in 2021 that time. But otherwise, it's a company that has always traded well above that value. And that's why I say shares like these, Truworths, for example, to build a portfolio like this just takes time. That's all I can say. And it's buying a little as you keep going, but sitting in a lot of cash as well, so that when these opportunities side are there, you're able to buy them. And what does latter side mean? It means that a company is paying a dividend of 4 Rand. It barely ever goes below 40 Rand in share price. And then one day you wake up and the share price is 15 Rand. Instead of thinking that, oh my God, everything is going wrong, what should I do? I'm gonna die. Actually realize that no, you actually not gonna die. This is normal and this is what's supposed to happen in terms of people panicking and being unprepared and not knowing the true value of a company. Whereas in your case, you would know the true value of a company. I just want to share um, um, my screen. Just think of Novus and ISA holdings as well as Novus. So this one, ISA, that I bought at 81 cents. And then also, what's this? Novus that I bought at 120. And I want you to see what I'm talking about in real life, right? In real life, when it comes to this, I'm gonna share the second screen, which is that one, right? Are you guys seeing the correct thing? Yeah, it's that one. What I want you to see on here, so I have a screen this side. So every time you see me look at this side, yeah, it's that side. It's because I'm looking at the second screen. So what I want you to look at here is these two companies that I just said we're essentially going to highlight and look at. Novus that I bought at 120. Oh, it doesn't want to highlight this one, as well as ISA, which I bought at 81 cents. ISA, I know, is the last one on the spreadsheet right over here. ISA holdings that I bought at 80 cents. And what I want you to see is to see that. So you can imagine in 20, what year was it? I'll tell you now. In 2019, when I was buying the share ISA holdings at 80 cents, what you had was essentially a situation where they were paying a dividend of 39 cents. Then they since didn't pay a dividend 2020, 2021, they paid 88 cents. So the 8 cents, which is about 10%, and then 20 cents dividend in 2021, which is a 25% return on the 80 cents share price. I wanna show you the Novus, which is another one. Look at Novus's dividend line. This line. So this is a share that I bought for 120, and I bought it, I think, 2019. So they paid me a 30 cents dividend, then no dividend this year, then a 50-cent dividend, 40-cent dividend. and historically they were paying a 52, 56, 70 cent dividend. So you can imagine that at 120, it's ridiculously cheap because you get 50 cents of your 120 back and you're automatically in the money. So that's the sort of thing I wanted to show you, why you would sit on cash and why you shouldn't panic when it comes to looking at your portfolio and wondering, what do I buy and what do I do? Obviously, all of this comes with a lot of experience. I've got more than 10 years investing experience. I think I'm currently sitting on 11, 12, 13 years experience. So it's easy for me not to panic. It's easy for me to sit on cash. And instead of feeling like I'm losing money, I feel like I'm losing on 50% dividends or 25% dividend, which I know you're not going to get anywhere on earth. You can jump sideways, you can jump up and down, what have you. You're barely going to get those sorts of opportunities, right? Those opportunities come from waiting. If you listen to Warren Buffett, they're basically sitting on close to $250 billion in cash in Berkshire Hathaway. And the reason they're sitting on that type of money is because they know that when opportunity comes, cash becomes the most scarcest resource. But as I said in the previous video to you guys, I don't want you to sit on cash in your bank account. I don't want you to sit on cash in a 32-day notice because number one, it's going to tempt you to spend it and it's going to make you feel like, okay, it's December now. Let me quickly use 10,000 rands and then I will pay it back in Jan or Feb when I'm fine. Keep it in your investment account. And the reason you're keeping it in your investment account is because cash is an investment. It's an investment in opportunity cost. It's putting your portfolio in a position where, should an opportunity strike, you're not in a position to lose out on it. Some of the good investments that I made this year was buying Exaro at 150, African Rainbow Minerals at 150, and they immediately paid it, I think, a 12 Rand dividend each, which is basically about 10% of my money back. In some instances, that's money back within a space of a week. And then as time goes, the share price, I think currently Exaro is sitting on like 184 and African Rainbow Minerals is sitting on 190, which is roughly, I think, a 20, 30% return total. And I'm still very comfortable that this is a share that I would buy even at 200 rands because the dividend is still good. And if you're not able to appreciate that level of risk, that is why we would advise that you continue buying ETFs and you continue just periodically putting money in your investment account. That's basically investing psychology. I saw an opportunity to discuss how is it that some people are able to show 100%, 200% returns in their portfolio. And the idea was not to say, listen, I'm someone that can find 100% opportunities. As I say, if I'm speaking about 2019, 2020, that's already 3 years ago. Some of you don't have the temperament to wait 3 years for a once in a lifetime opportunity or once in a 5-year opportunity. And you shouldn't be expected to have the ability to wait that long. That is not something that an amateur is able to do. That is something that you do as a professional, preferably with your certifications, with your 80% distinction in investments. Outside of that, if you are doing it, just be aware that you're not hoping, you're not waiting on hope. It is a calculated decision to sit on cash and wait for an opportunity to arise. I know it's called timing the markets, as far as some people would be concerned. On my part, it's not timing the markets because I'm not saying I'm waiting for Louis to drop 50%. If I can show you once again, it's in essence what I've got. I've essentially got a whole spreadsheet. If we look here, a whole spreadsheet with it's a lot of companies. So I've essentially got a spreadsheet with about 35 companies, of which I'm just waiting for them. So for example, these two, you won't see what the names of these two companies are. And look how green they are. This tells me that both the dividend and the earnings are in, what do you call this, at a discount. So if I buy this share at 22 Rand 50, I'm going to get 25 Rands in dividends. If I buy this share at 22 Rand 50, I'm going to get 56 Rand in earnings, meaning that I'm buying a share that's basically 60% at a discount. What share that is, I'm not going to tell you because it can go down further from here. I'm expecting this share to go down to 11 Rand. This one, I don't even know what I'm waiting for anymore. It just hasn't moved in all of these years. And this is the dividend that they've been paying. So you can imagine buying it at 2 Rand 14, 11.7% dividend, 11 cents dividend. Let me just calculate 11.7 divided by 2 Rand 14. That's a 5% dividend, not anything to write home about. Let me check the 36 divided by 2 Rand 14, a 16% dividend. You're collecting good dividends on a company that probably the stock market is saying is going through a lot, but I value the share at 15 Rand. So you can imagine I'm buying this with my eyes closed at 3 Rand 80 in dividends that I expect to collect over the next 10 years. 2 Rand 14 is absolutely nothing because just by dividends alone, I get to get 100 and something percent of my money back. And essentially, I don't know which company is going to be cheap. So, for example, Spur, I love Spur with all my life, but if you check there, it's very expensive. So there's no chance in hell that I'm gonna buy Spur anytime soon. But should Spur's share price all of a sudden go down to 10 Rand, then this will show me that, oh, Spur is a buy now. I've been tracking the balance sheet, I've been tracking each year's earnings, as you can see up there. And essentially, all I'm waiting for is for the share price to become cheap. Some companies, Truwords, for example, you'll see that I bought it at, let me just check on the screen. I bought Truwords at 38 Rand. Am I correct? I'll tell you now. Yeah, I bought Truwords at 39 Rand. But the reason I could do that was because on my spreadsheet, in dividend terms, I valued Truwords at 40 Rand. And in share price terms, I valued Truwords at 52 Rand. So when I was buying them at 39 Rand, for me, it was a comfortable no-brainer. Today, the share price is sitting at 74 Rand. I wouldn't touch Louis. I mean, not Louis, Truwords. And the reason I wouldn't touch Truwords is because I don't see how I'm gonna recover my money. But I've already got my 88% return on Truwords in terms of share price and the dividends that it has been paying over the last couple of months or years. I mean, a 5 Rand dividend when I bought the share at 50 Rand, that is a comfortable 12.5% return. You're not gonna get that at any of the banks. And for me, that's what the spreadsheet essentially helps me do. As you can see, there's a comment box on there, and this comment box is for other factors and for things that I discuss and consider, that sort of a thing. But just to show you that this is not a gamble that I'm taking, this is not me. Yeah, all these market timing, speculation, you name it, I'm not interested. I go to bed. Every day I wake up, I don't check the stock market. I wake up and I just do valuations. I just value companies, value companies, value companies, and then just sit there and wait. And my spreadsheet will show me which share price has fallen, and therefore where should I quickly panic and buy a share. That's me. I wanted to discuss the issue of high returns from investments, why we don't talk about them, but that they 100% possible. Again, I'll just go over this portfolio one last time. Because I don't normally do that, I will just go through it the last time so that you can see what an investment portfolio can look like once you have set out I normally do say it's about 5 years that you must be willing to sit and be patient. Once you have done that, what your investment portfolio can essentially look like. I mean, you've got 74%, you've got okay, -2%, positive 103%, positive 45%, positive 86%, -27, 57, 108, 261, 11, 74, 59, -53, 102, 22, 166, and 88. Those are returns that you would say this is a pyramid scheme. And I'm never, ever, ever going to say to anybody that, listen, tomorrow you can make these returns. Minimum 5 years that you should be prepared to wait to make those returns. And if you take your 122% and you divide it by 5, it's a 20% return, which is still phenomenally high. I would not say to anybody that I can make you a 20% return. I don't think it's possible. I think the only way that I've been able to do something like this is the lack of COVID, but also the patience and the lack of being able to not be afraid when the opportunity opens itself. Obviously, it's after having done my calculations on something like this. It's not coming solely from praying and hoping that the market is having a bad day. I'm keeping track of these sort of things and I know my companies inside and out. And yeah, that's that. That's investing 101. That's something that I don't think anybody would necessarily tell you or let you know. I just want to show you um, my New York stock exchange portfolio. This is what it currently looks like. So you can see that as things stand, there's no yellow green pricing. And that's because I'm still filling in the information for all of these companies. So current assets, current liabilities, earnings, dividends, and then share price. And then when I'm done with it, it's going to look like that one that I've bought. So all these blanks are companies that I still have to value. And that basically is what's going to create the return for me that I want on the market when I have been investing for 5 years in the US, 10 years in the US. I will have all of this information plotted out and I will be keeping abreast with news, with plans, that sort of a thing. That's what it means to be an investor, guys. You're not guessing, you're not hoping, you're just doing pure valuations. People say it's calculated risks, it's calculated risks and returns, calculated risk rewards and returns, that sort of a thing. I'm your boy, Chairman Mo, 82% plus of business investments. Um, yeah, be safe out there. Enjoy your festive season. Put aside savings, put aside investments. It does pay off in the long run. It's not a quick buck, but eventually it puts you in a position where the amount of money that you get from dividends is insane. Yeah, cheers, guys.